Eric Mwadith, Mwadith.com. Let's take a look at CME here, April 11th, 2016. If we take a look at the monthly, we can see that the monthly has been showing negative divergence resistance line. If you draw it like that, that's one layer of resistance. Keep in mind, we've been making these highs as the stock has been making higher highs over the last couple of months. And so we came back, we made higher highs in price, but the RSI was making lower lows. That's the monthly. Same thing can be said about the weekly. And you'll see that on the weekly, the stock had been making higher highs throughout 2015 and going into 2016. At the same time, we can see that the RSI really did not make any meaningful high. As you can see that there's an RSI resistance line that connects the highs here, connecting the highs of July 2015 and also the highs here. That's one layer of resistance. The other layer of resistance comes from the previous breakpoint, where we can see that if we draw a line here going back to this break, so this break in August, and we can call it somewhere around here in August, this break of a trend line on the weekly RSI brought the stock off that level. And ever since then, every time we come back to that level on the RSI and cannot move above that level, we seem to show resistance. As you can clearly see here, we hit that level once before during this high here, and again, which was the high there. We've come back here in 2015, we've hit that same line, which is a red line, and we seem to be pulling back, which makes a lot of sense. If we take a look at the daily, we can see that the recent move lower began with daily negative divergence. So there is another instant of negative divergence. As you can see, we had moved to new in price, slight higher high on a daily closing basis. While that was taking place, we can see that this corresponded with the RSI making a slight lower low. After that negative divergence, of course, we see that the stock did drop. So a couple of observations here in the short term. There is a line that is right now offering support, and until that line is broken, so we can draw a line connecting RSI lows on the daily. And as long as this line is holding the stock together and there is support, one can expect there to be a bounce based on that support level short term. Otherwise, watch for any break, because any breach of that support line on the daily could be a problem. A movement below that line could be a problem. Keep in mind that the best way to look at this is maybe use the monthly. The monthly here has a recent monthly closing low, because should the stock move below this monthly closing low of January 2016, so a movement below that price, and the level to watch there is if the stock moves below 89.27. So moving below that might suggest that that is where it breaks down. And of course, you have to be sensitive to the possibility of lower prices if it moves below 2016's monthly closing low, because at that point, that would correspond with the potential for the RSIs and for the MACDs to be moving to fresh 3-year lows. So watch for this, because if the RSIs move to fresh 3-year lows on the monthly, and at least one of the MACDs moves to fresh 3-year lows, any movement to 3-year lows might suggest that that is when one can expect a big push lower. So watch that threshold at 89.27. Anything below that could suggest that there's a bigger correction around the corner. Eric Mwadith, Mwadith.com. Good luck, peace, and blessings. EACS.